Hi guys, today I'd like to talk to you about the market in general, and I'll give you three stocks that's a good bet right now, in my opinion. But as always, subscribe, like this video, and if you want to see my trades on pretty much everyday basis, then join my Patreon club. The link is in the description. So in my last video, I told you that there were a lot of things hanging over the market, like inflation and war in Ukraine. But at the same time, April is considered to be one of the best months in the market of the year. So at the same time, also there are a lot of cash on the sidelines. So I thought maybe we could see a pop in the market prices, but that came crashing down on Tuesday when one of the Fed governors came out, Lael Brainard, and she came out swinging, and she said the inflation was too high, and she wanted to fight it, and she wanted Fed to take action, and she's a known dove, and I have to tell you that the Fed committee consists of doves and hawks, and hawks are people on the Fed committee that are favor more restrictive policy, and they want to raise rates and to fight the inflation. And doves are the people who are favor a more linear policy, and they want to spur economic growth, so they want to keep the rates low. So she's a very known dove, and she came out swinging and saying that the inflation is too high. And that actually took the market by surprise, and since then the market was treacherous. Moreover, another member of the Federal Committee came out, Charles Evans, who is also considered to be a dove on the Federal Committee, and he said that a 50-point base increase is very likely at the next Federal Reserve meeting, and also there could be 9 hikes this year instead of 7, as Jerome Powell promised. So that really didn't work well for the markets. I mean, when doves come out and say that we need more raising rates, and that doesn't go well for the market at all. Also, the war in Ukraine is considered to be a contributing factor to the inflation. I mean, besides the tragic events and loss of human life, but because of the rising prices for steel, aluminum, agricultural products, oil and gas, that contributes to inflation, and the Federal Reserve has to fight that. Besides, there are reports that Russians just used chemical weapons in Mariupol, city of Mariupol, and that could not go well for the NATO and American allies, because if they have to get involved, that's going to be more trouble for the market ahead. So tomorrow is the CPI report, April 12th. So when this video comes out, you already will know the numbers for the CPI March data for the inflation report. And CPI core numbers will come out as well. And last time the inflation came out 7.9%, which is extremely high. And if the report is going to be as hot tomorrow when the number is reported, we may see another pullback in the market. But if the report is not going to be as hot, maybe we'll see a pop, which I generally would like to sell, unfortunately. But when Fed is on a pace of raising rates 7-9 times this year, and taking liquidity out of the market, you don't want to be in stocks generally. Just basically some stocks, value stocks, very rarely growth stocks, but those stocks, growth stocks and the spec stocks, are not the stocks to buy in this kind of an environment. So that brings us to a few stocks that I'd like to be in this kind of environment. And these stocks are from the same group, so you can take your pick, but generally they are good to be in. Last year, Congress passed $1.2 trillion infrastructure spending bill in response to the clear need to refresh aging roads and bridges across the U.S. That boost in construction means more demand for steel. Meanwhile, Chinese demand for the industrial metal grows almost 10% annually. And of course, the demand in emerging markets is just beginning to accelerate. But more recently, steel stocks have been moving due to the Russian invasion in Ukraine, and some of those stocks have been more exposed to than others. But even those that do not have been affected, moving too, because Russia is the top five global steel producing nation. So the conflict and the resulting sanctions are likely to create a global supply and demand imbalance. And of course, you have to produce more airplanes, tanks, and rockets and other things that require steel. So steel companies have been hot lately, and I have a few of them to recommend right now. SLX, which is the VanEck Vector Steel ETF. For those of you who are not comfortable investing in individual stocks, I think that's a good idea to invest in this ETF. And as you can see on the chart, it's been rising pretty steadily and has been on a big run lately since the Russia-Ukraine conflict. And I don't think it's going to stop anytime soon. And a lot of steel stocks have a very similar chart because of the prices for the steel have been hot. And even though Fed is on a course to fight the inflation, so the commodity prices should take a little bit of a dip, but still the demand for steel in the coming months due to this conflict, Russia-Ukraine, and even if this conflict is over, is the demand for steel is going to continue because U.S. and other nations are going to increase the weapons producing and actually other things. Ukraine would need to be rebuilt, and that would require a lot of steel and actually iron. So the prices for these commodities will remain, in my opinion. Nucor. So Nucor is using electric arc scrap furnaces, which are a lot more efficient than the blast furnaces that have traditionally dominated the industry. And these electric furnaces are smaller, less costly to operate, and can more easily be ramped up or slowed down based on demand. So that actually separated Nucor from the rest of the competition in recent years. But recently, a lot of companies actually catching up to Nucor, so they have to catch up. They have to stay up with the competition and technology. But generally, the stock is trading at 6.5 PE, which is very cheap in my opinion, and have a lot of room to improve the cost of producing. So I think it's a good investment. X, US Steel. Well, the market has been very kind to this one-time giant, and it's been in a rough patch for the past few years. Because U.S. Steel has not been managed very well and actually did not keep up with the competition and actually played second fiddle to companies like Nucor. But recently it's been divesting from the unprofitable businesses and streamlining their profitable operations. So it's been doing a lot better lately. It's trading at 2.6 times earnings PE. So it's a pretty a good company to invest in this environment. It's a value stock, and compared to the growth stocks, and just like Nucor, I think it's in a good position to go higher. Finally, is Cleveland Cliff. Stock symbol is CLF. Well, what I like about this company is the move that they have made back in 2020 when they acquired U.S. steel making operations of ArcelorMittal, and that was a bold move in my opinion, and that actually helped this company a lot because it made sure that it has ample demand for its ore, but also giving investors broad exposure to many parts of the steel business. So this company is also in a good shape, but they're all trading in the same kind of a chart, as you can see, pretty much similar to SLX. And but because of the demand for the steel has been so hot lately, they all have been rising, and I don't think it's going to stop anytime soon. So that's it, guys. That's the wrap for the day, and I'll see you next time.